Pablo, good to see you. How you doing? How you been? Mike, good to see you as well, brother. How you doing? How you been? Hi, Miles. Is the case over? Why no movement for XRP? Yes, Johnny, good to see you. How you doing? We're going to go through regarding the XRP news today, which is incredible news, to be fairly honest. But I'll tell you also why the case hasn't essentially, I'll tell you why the price of XRP hasn't moved. But what has happened today is tremendously bullish for XRP moving forward. Tremendously bullish. Hello, Miles of CMF. Comment, it's good to see you. How you doing? How you been? Well, I'll tell you essentially on tonight's live, once we start off the live, on the XRP essentially case and why the price hasn't moved yet, but it is going to move tremendously. Comment, it's good to see you. How you doing? How you been? Hey, CM, hope you're well, sir. Larry, good to see you as well, brother. How you been? How's things, Larry? Hello, Miles of CMF. Carol, good to see you. How you doing? How you been? Evening, Miles of family. Ian, good to see you. How you doing? How you been, brother? Hi, Miles of CMF. Daisy, good to see you. How you doing? How you been? Hi, Miles. Good to see you again. Autistic, good to see you. How you doing? How you been? Good evening, Miles of CMF. Free and Feather, good to see you. How you doing? How you been? But yeah, incredible news that came out today. And it's not just the Ripple news and that came out today, which is incredible news, but it's also two other pieces of news that, you know, the timeline of it coming out today, it tremendously correlates with the Ripple case announcements, which is regarding banks are able to start using crypto assets again. Now, if the first perspective that came through was from the OCC, now we've had another perspective coming in from the FDIC as well, telling banks they're allowed to start using crypto assets. The FDIC was very against cryptocurrencies, not so much now. And today was the day they made the announcement, which we're going to go through on that tonight's live as well. Also, we have the SEC announcing 4 more roundtables back to back, which is incredible. And again, they announced that today out of all days. So it all correlates together with the Ripple case. And I'll tell you why once we go more into the live. If it moves, Free and very good to see you. How you doing? How you been? Good evening, Miles and all CMF. JP, good to see you, brother. How you doing? How you been? It does move. What price can we expect? If the price of XRP moves because of this case, essentially the lawsuit getting fully dropped, XRP will do quite well for itself, just, you know, boosting up a little bit. But the biggest boost of all is going to be regulations, which, by the way, isn't that far off with the announcements that's coming in from the SEC, CFTC, and FDIC now. Hi, Miles of CMF. Dennis, good to see you. How you doing? How you been? Evening, Miles of CMF. Joe, good to see you. How you doing? How you been? So we'll start off the live and, you know, essentially we'll do the intro disclaimer, and by that time everyone's tuning in for the first part. Welcome to the CMF Live. If you're watching this for the first time, the CMF stands for Crypto Miles Family. My name is Miles. I'm hosting a live that you're watching right now, and this is episode 285 of the CMF Live. And in this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live as well, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. Now, before we do go through the news, and the first news we are going to be going through essentially on tonight's live is regarding an SEC lawsuit being dropped. Obviously, the SEC Ripple lawsuit we're going to go through on tonight's live as well. A little bit later on, we have essentially SEC news to go through on tonight's live, CFTC news to go through on tonight's live, FDIC news to go through, Ripple case news to go through, and another SEC lawsuit that's been dropped as well to go through on tonight's live, and essentially some perspective news, some CEO news, some other essentially acquisitions of Bitcoins to be added to different portfolios, and an ETF that's been applied as well, tokenization news to go through on tonight's live. So a few things have been happening inside the crypto space, which we're all going to definitely cover on tonight's live. But before we go through the first news, which is regarding another lawsuit that's been dropped by the SEC, let's go inside the comment section first, and then we'll go straight into that news. Also, by the way, I just want to say thank you so much to everyone from the CMF who's watching on X right now, who has liked this live, retweeted this live on X, put a comment outside the live, and hashtag the XRP on me. And if you're watching us on YouTube, if you haven't done already, like the live, put a comment outside the live as well, CMF members. For everyone who has done that, thank you so much. If you haven't done that, just take a quick second to like, essentially, and retweet. Now, let's go to the comment section first before we go through the first news. Evening, Miles of CMF. Manny, good to see you as well. How you doing? How you been? Good evening, CMF and Miles. Mr. Tangent Ring is arrived. Tangent has arrived. That's great, Denise. Happy birthday, Denise. Good evening, Miles. How are you? I'm doing great, Callie. Good to see you as well. How you doing? How you been? Evening, Miles of CMF. Pierce, good to see you as well. How you doing? How you been? We are almost there. Yes, facts, Stormy. We are definitely almost there. Hi, Miles and family. Alex, good to see you as well. How you doing? How you been, brother? So, the first news we're going to go through on tonight's live isn't regarding Ripple news, but we are definitely going to be covering the Ripple news as we go along on tonight's live. We're going Ripple news, CFTC news, SEC news, and essentially FDIC news, which is the timeline of all of it is quite interesting, actually. But the first one we're going to go through is another lawsuit that's been dropped by the SEC today, which is securities. Securities COO has came out and said that this is a new era for the crypto space because the SEC has just dropped another lawsuit in its hours. The US crypto industry has essentially undergone a significant turning point with the help of, from the White House, essentially the Trump's administration in general, for bringing this pro-cryptoness inside the space and getting the SEC to drop these lawsuits back to back like a domino effect. And also getting the SEC and CFTC to work together as well. And speaking during an interview with Bloomberg, essentially, the former Grayscale CEO discussed the obvious change in how the White House essentially is dealing with the crypto industry. Notably, Biden's administration tone was defined by enforcement actions, while Trump's administration is signaling a much more willingness to collaborations and to essentially bring in innovation inside the United States. And this is all coming from Grayscale's essentially former CEO. He said it really is night and day, essentially, between the two candidates, which Biden's administration was damaging the crypto space, and then you have Trump's crypto space, which is just bringing in innovation, dropping lawsuits, bringing in regulations. And it really is night and day in his perspective. And he said now the lawsuits have been dropped. The White House has essentially head of the crypto and the SEC as a task force actively essentially meeting with businesses. This new regulatory backdrop, he said, is laying the groundwork for a rapid rise of tokenized, essentially real-world assets to happen inside the United States at Securities, which essentially operates the largest tokenization platform to date. The company has already brought nearly $2.5 billion worth of assets ranging from treasuries to public equities and is also onto public blockchains like Ethereum and Polygon is essentially what they're using. Now, the CEO, essentially COO of Securities, said and emphasized that tokenization isn't just about blockchain hype. It's about improving the investor experience by offering daily dividends, instant liquidity, and 24/7 access to their assets. These are all unique benefits that are not available to investors in traditional financial markets. And he also said 24/7 tokenized trading for capital markets. He pointed to the firm's partnerships with BlackRock and the Build essentially tokenized treasury fund as well as a prime example of that, noting its abilities to offer real-time essential redemptions and the use of DeFi in terms of ecosystems. As tokenized treasuries and equities expand, the CEO essentially of Securities expects the momentum to continue throughout the year, the momentum of bullishness for the crypto space to continue throughout the year. He said that Securities is seeing a growth rate of above 500% in tokenized treasuries alone, while scoring essentially recent milestones like the tokenization of Exodus, a publicly traded company. And looking ahead to the SEC's leadership transition, the COO essentially of Securities stressed the importance of continued dialogue that's actually happening with the SEC, while the SEC is actually having sit-downs with blockchain companies and also having sit-downs with other regulators inside the space like the CFTC, or even having sit-downs with the White House to see how they can bring that innovation inside the United States. Essentially saying this is something that we've never seen before, and that's going forward is going to be extremely a much more friendly, crypto-friendly environment for the crypto space moving forward. And he said, if we're going to be expanding access to real-world assets or revisit essentially accredited investors, this is definitely the path to be taken. Facts. So not only essentially did the SEC dropped the Ripple case, which we're going to go through on tonight's live as well. But they also dropped another essentially case, which was securities. And they are massive inside the tokenization space. $2.5 billion of assets going towards the tokenization space is incredible. It also does show that the SEC is dropping cases like a domino effect back to back, having sit downs with businesses, having sit downs with essentially blockchain firms, and even having sit downs with the CFTC after a decade, pretty much. Now, moving on essentially from the SEC dropping securities case to GameStop. GameStop has essentially embarked on the crypto venture portfolio style. They've decided to add one particular crypto asset to their reserves. They want to follow the suit of MicroStrategy or essentially MetaPlanet or any other company out there that is essentially adding crypto assets to their portfolios. And it's nice to see this is happening more inside the traditional market space. So in a significant step move, GameStop has announced that its essentially board of directors has unanimously approved of adding Bitcoin as a treasury reserve asset to their portfolio. This decision marks a pivotal moment for the video game retailer as it essentially diversifies its treasury holdings by venturing into cryptocurrencies. GameStop, which essentially holds approximately $4.78 billion in cash or cash equivalents and marketable securities, is following the footsteps of companies like MicroStrategy, for example, which has a prominent crypto holder of Bitcoin for the time being. The move is a part of GameStop's essentially broader efforts to, revolutionize its business under the leadership of their essentially CEO, Ryan, who has been focusing on essentially cutting costs and measuring and operational essentially streamlining as well. And the announcement comes alongside GameStop's fourth quarterly essentially financial results, which showed a net income of $131.3 million, a notable increase from their $63.1 million reported in the same period last year. However, the company's revenue missed expectations, reflecting a 28% year-over-year decline. Now, GameStop's foray into Bitcoin, their first crypto asset, they are definitely going to be expanding into other crypto assets as well, but their first essential crypto asset, foraying into Bitcoin, is expected to expose the company to the volatility essentially associated with cryptocurrencies, but it also presents an opportunity for diversification and potential long-term growth. Now, the company has not disclosed specific details regarding the amount of purchase they're going to be making towards Bitcoin or the timeline of the acquisition, but they have made the announcement and the voting has already been done inside the company unanimously. Now, this streak shift highlights GameStop's willingness to adapt and innovate in a rapidly changing retail landscape as it seeks to leverage emerging technologies like cryptocurrencies to enhance its financial resilience and competitiveness. Now, the only reason GameStop is doing a maneuver like this is because of because essentially of Trump's administration of being such a pro-crypto space and, boosting the SEC to become pro-crypto, boosting the CFTC, the FDIC, the OCC, the CFPB, and the list just goes on. Now, moving on essentially from GameStop, announcing that their first acquisition of entering the blockchain space and into their crypto portfolios is adding Bitcoin, we're going to move on to Mexico, because Mexico is about to be hosting the biggest, or essentially South America's largest and first stablecoin conference in 2025. Now, why is Latin America extremely focused on stablecoins? Well, it should be the first marketplace anyone wants to regulate first, but it's also the first marketplace that the US is about to be regulating. If you all know, the Genius Act, which is the Stablecoin Act, or a version of the Stablecoin Act, which is going to be passed sooner or later. They said the timeline for the US to be passing that Genius Act, which is regarding stablecoins, is about within 2 months. So it could give a detail of why Latin American countries are now lining up to regulate stablecoins. Is it because the US is about to be doing it? Probably yes. Every market space around the world is definitely watching what the next footsteps are going to be from Trump's administration, this pro-crypto space. So here it is. Mexico will become the first Latin American country to host a large, essentially scale stablecoin conference set for essentially August 27th to 28th, 2025 at Mexico City's World Trade Center, organized essentially by Bitso Business. The Stablecoin Conference 2025 will gather over 1,000 global experts, including regulators, fintech leaders, and blockchain developers to discuss the future of stablecoins in Latin American countries. The event is supported by major industry players like Visa, Circle, Solana, Arbitrum, and the list goes on of the amount of essentially blockchain companies and institutions that are going to be entering into this sit down they're going to be having. Now, the panels will address regulations, business adoption, financial conclusion, and emerging trends inside Latin American countries when it comes to the blockchain space. And also stablecoins, which maintains a value pegged to fiat currencies, have surged in Latin American countries as a tool to counter inflation and currency devaluation also. And according to the data, 39% of regional crypto investors now use stablecoins like USDT and USDC as savings in terms of essentially going and start using fiat currencies. They would rather use stablecoins. 39% in Latin American countries would rather essentially use stablecoins. Now, CryptoQuant has came out with the data, and it shows that ERC20 stablecoins on exchanges reached $46.5 billion in early essentially 2025, though the reserves have recently declined slightly, ever so slightly. Now, despite this, demand is still persistent due to stablecoins' role in cross-border payments, essentially in hedging against market volatility. Now, Mexico's growing influence in crypto adoption aligns with Bitso's business annual essentially felicitation of $12 billion in cross-border transactions, serving a global businesses with crypto essentially infrastructure as well. And the conference aims to solidify Mexico's role in shaping essentially stablecoin policy and adoption for Latin American countries. Bitso essentially business CEO Imran Ahmad emphasized the event's goal to foster dialogue among industry leaders, regulators, and innovators in financial transformations. And tickets are also available with a 30% early bid discount, reflecting organizers' push for broader participation from the retail section as well, even though there's 1,000 fintech CEOs, executives, board members, all attending this major event for Latin American countries to talk about regulations, to talk about, the adoption rate that's going to be happening in Latin American countries. I mean, we do know for a fact that El Salvador is doing an incredible job in terms of the crypto space. We also have essentially Brazil leading the way with a lot of regulations and a lot of ETFs and also CBDCs. Brazil's CBDC is called DREX. That's coming out this year as well. Now, the gathering also underscores Mexico's strict move to a lead discussions on digital asset regulations and utility, balancing innovation with economic stability. So the US's number one focus right now within 2 months is going to be essentially alongside the other things that's happening inside the crypto space inside the US, with the banks being allowed to start, utilizing crypto assets, with the CFTC and SEC coming together to, regulate the crypto space after a decade of not working together, or the FDIC today, which we're going to go through on tonight's live as well, how they essentially became pro-crypto, and they're getting rid of one particular, you could say, banking rule that should help crypto companies to work on a much more playing even field with banks and institutions inside the United States. But with all the things that's happening inside the United States, one other thing is happening, which is the Genius Act, which is happening inside the United States right now. And with America being focused, the next footsteps essentially being, stablecoins, and then with the rest of the regulations coming in place, it shows you that other countries are definitely looking at America's footsteps to see what footsteps they're taking inside of their market space, because America is the biggest market space on the planet. And it shows that other countries are definitely following suit, because Latin America doesn't want to fall behind from North America, essentially. Now, Fidelity is what we're going to talk about next. So moving on essentially from Mexico creating the biggest essentially conference for the crypto space in Latin America to Fidelity. Fidelity is essentially funding, once again, Fidelity clients are funding their ETF portfolios, you could say. So there was a slight decline in the past weeks. There was 5 consecutive weeks of outflows happening from Bitcoin ETFs. Slowly, the inflows are happening once again. And the numbers are in from Fidelity. So Fidelity's Bitcoin ETF sees a $60 million inflow. Fidelity's spot Bitcoin ETF gathered $60 million in inflows recently, highlighting their sustained institutional interest in Bitcoin investments. The increase in assets under management essentially underscores the growing confidence from institutional investors as the ETF market for Bitcoin continues to mature itself. The infusion of capital reflects the heightened interest from institutional investors, signaling ongoing trust in Bitcoin's essentially future and potential future. Notable financial shifts were also observed as essentially further capital poured into the ETF market space after 5 consecutive weeks of outflows. As these Bitcoin exchange traded products have matured now over a year of being in the market, we've seen an uptick essentially in adoption by using essentially institutional investors institutional investors and just really in the last 2 quarters alone, we've been seeing that essentially from Ryan's perspective. Fidelity's FBTC has experienced substantial essentially growth, being a crucial player alongside BlackRock's IBIT, with their essentially assets under management now surpassing $21 billion as of March 25th, 2025. The price of Bitcoin was essentially recorded at $96,583 on the same date. FBTC's role expands amidst consistent essentially inflows since its 2024 launch, witnessing its highest single-day inflows in March 2024 at $473.4 million. Eric, essentially also an expert at Bloomberg, comments on the ETF's remarkable consecutives in inflows and days, ranking among the top performers so far. Bitcoin trading reflects a market price of $88,228 at a market cap exceeding $1.75 trillion per market cap per essentially CMC's data. Recent price changes showcase varied trends, with a 7.6% increase over the past week and a 0.18% decline over the last 24 hours. Key financial implications arise from the amplified participation of regulated, essentially institutional investors inside the crypto space, and this trend could spur regulatory bodies to further develop policies that integrate digital assets within traditional financial frameworks, potentially leading to increased market stability and expansion opportunities. So, Fidelity and a few other ETFs are right now experiencing inflows once again into their Bitcoin ETFs. So it shows that the market space is starting to come back to essentially crypto assets. And because in terms of stablecoins were doing extremely well for themselves. The volatility that the market stage was in right now, with the tariff scenarios and tariff news that was coming out, the market space was all over the place, and stablecoins were growing tremendously. Even though Tether, essentially USDT, is banned out of the EU market space, and Canada's up to a certain extent, even essentially USDT was doing tremendously well for themselves. So was USDC, and so was RLUSD up to a certain extent as well. But it is showing that, once again, institutions are coming back to the market space. And we did have yesterday Venezuela essentially getting that 25% tariff increase for any country that's buying oil and gas from them. But the crypto space couldn't care less. It was 2 reasons. One was because they couldn't care less about Venezuela because it's not that much of a big news. But in reality, it really was because Venezuela was essentially supplying oil and gas to China, to essentially Russia, to Spain, and a few other countries as well. But it seemed like the crypto space has become a bit more resilient, and they couldn't care less about the tariff news, and that the crypto space wasn't moving like a tech stock anymore, which is good. Now, World Liberty Financial is what we're going to be talking about next. Now, everybody's most likely heard about World Liberty Financial inside the crypto space. It is, in fact, Trump's son's crypto project with his business partners. Everybody does associate World Liberty Financial with Trump directly himself, but it is technically his son's project and his business partners. So, World Liberty Financial has decided to introduce a stablecoin. The timing of it is interesting because we're just about to be getting stablecoin regulations inside the United States with the Genius Coin Act. Now, here it is. World Liberty Financial, the Trump family essentially backed crypto project, has made headlines with announcing the launch of its own USD1 stablecoin. However, the launch of USD1 has not followed any governing essential proposals or on-chain vote, which is essential for every crypto project where token holders make decisions by casting their votes. Now, this move has sparked debates about decentralization values of the World Liberty Financial project, with critics arguing that the government's decisions are being controlled by insiders rather than the broader community itself. If major developments like stablecoin issuance can occur without a vote, the World Liberty Financial token utility as a governance token could be called essentially into question. Now, while replying to essentially World Liberty Financial's USD1 stablecoin launching essentially announcement, users are also asking about the status of World Liberty Financial's token itself, which has not yet declared tradable on any exchange. Neither it has essentially any live utility for now. There are many reasons why essentially the token for World Liberty Financial isn't tradable, one of them being due to regulation basis, and also if it is becoming tradable, then you know how the politicians are going to react. The ones that hate Trump, most likely the Democratic politicians or the liberal politicians will say Trump is trying to scam American citizens by selling tokens. if World Liberty Financial becomes tradable. So up to a certain extent, there are some rules and situations there why that token is being governed so much. Between October essentially 2024 to January 2025, World Liberty Financial successfully raised over $550 million from their essentially World Liberty Financial token pre-sale, attracting essentially participation from over 85,000 investors, initially targeting a $300 million raise by selling 20 billion World Liberty Financial tokens at a price of essentially 1 cent each. Now, the overwhelming essentially demand led to an extension of additional 5 billion tokens sold at essentially 5 cents in January 2025. And this massive fundraising reflected strong investor confidence in the project's vision. However, the launch of USD1 without essentially governance vote has sparked concerns whether World Liberty Financial Token in fact is essentially a decentralized project or actually a centralized project in general terms. And as USD1 launch could help expand the project's ecosystem and bring in more users, World Liberty Financial Token holders are losing confidence in the project as they feel that their tokens hold no value in shaping its future because they didn't get the vote for the stablecoin that's about to be released or worked upon in World Liberty Financial. Now, when World Liberty Financial essentially launched day one, people did ask me essentially, should they look into it? Should they essentially go for it or not? I said no. I said, look, I respect some people might disagree with me, some people, but in my point of view, Trump has done a tremendous job as a president, a tremendous job for the crypto space so far. He's done an excellent job. But I did say World Liberty Financial is not the type of project I would rather, essentially, I would go for in any sort of a way. And here's the thing. Bringing it to essentially Biden. Hear me out. Biden's son, Hunter Biden. Hunter Biden was a useless son. He used his father's political name to essentially expand his own wallet, which now Hunter Biden is basically broke. Now, why did I bring up Hunter Biden? Because Hunter Biden used his father's name for political essential movements, and he made a lot of money for himself, but ironically, he's broke. Trump's son is trying to obviously use and leverage, the Trump family name with a crypto project. The difference between them, obviously, is that Trump's son is actually an intelligent young man. He's an intelligent, very smart young man who I do believe is going to become very successful in the future because he's not like Biden's son who just, wastes money on, drug abuse and so on. So to me, the World Liberty Financial Project always just seemed like a project, Trump's son wants to create and be a part of to establish himself as an entrepreneur. So it wasn't really a project that I would want to go for. The projects I really want to go for are projects that are, like Ripple, for example, XRP, licensings, agreements, banks, institutions, or XLM, or XDC, or HBAR, or AVAX, or TON, and the list just goes on. Those are the type of projects I would rather be in because those projects actually have utility purposes. They're, major corporations. They're trying to get their licensings. They're trying to, purchase other companies to expand essentially on their blockchain network, bring in tokenization, make contracts with banks, and so on. And that's what I would rather be a part of than a project that somebody's trying to use their father's name to leverage essentially for maybe it is a brilliant project later on in life, but it's nothing that I would really want to go for. And it's showing some sort of signs of people don't really get to vote on that project, and a stablecoin is being launched on that network. So again, if you are inside of World Liberty Financial, good luck to you. It could do very well for itself, and maybe it goes really, really south. But in general, to me, it just always seemed like a son that's leveraging his father's name to create some sort of a project with random business partners and make something out of himself. Now, also, as I said, I do believe Trump's son is obviously going to do a lot more better job than Hunter Biden ever did with his father's leveraging. But in general, to me, it just seemed like, a project that a son is leveraging his father's name for. Didn't really seem like a mature project for me to enter into any sort of regulations or licensing whatsoever. Now, moving on, essentially from World Liberty Financial's news regarding, introducing a stablecoin. The timing is interesting as well. As I said, Genius Act is about to be passed within 2 months. To BlackRock. BlackRock essentially built tokenization fund. So here it is. BlackRock, build expands to Solana. BlackRock's build tokenization fund is expanding to Solana to strengthen their tokenized treasury. BlackRock USD, Institutional Digital Liquidity Fund, has expanded to Solana blockchain, marking a significant milestone in the tokenization treasury sector. According to essentially a press release, this move makes Solana the largest home for yield-bearing tokenization treasuries. 1 year after launching Build, BlackRock and Securities have introduced a new share class on Solana. This expansion allows Build investors essentially to utilize the fund across Solana's growing ecosystem. Securities also emphasize the lower transaction costs and instant settlements that offers Solana, because originally, obviously, the Build fund is on Ethereum and it's expensive and congested. So they thought to themselves, going on Solana's chain would make it faster, cheaper, and more reliable than Ethereum. I guess somebody didn't tell them sometimes Solana can't process transactions when it gets congested. Securities CEO Carlos essentially stated that the integrating essentially Build with Solana aligns with the market's momentum towards essentially real-world assets and tokenized treasuries. He highlighted Solana's speed, scalability, and efficiency as essentially key major advantages of why it should essentially is being added to BlackRock's fund. Now, just to point out, this isn't BlackRock themselves making this announcement. This is technically coming from Securities, who is a part of the BlackRock Build Fund. Now, Lily Liu, the president of Solana essentially Foundation, noted that Solana provides Build with a balance of innovation and operational efficiency. She pointed to Solana's increasing network metrics and active developer community as essentially factors driving institutional adoption. Build creates and manages $1.7 billion in assets under management, and essentially positioning itself ahead of competitors like Fidelity's Treasury Digital Fund, which is planning an on-chain essentially share class on Ethereum. Numerous financial institutions use Solana to deliver better services to their clientele. People using essentially Polymarket's decentralized prediction market platform can now deposit Solana tokens also among multiple payment choices, which previously included by USDC, only by USDC stablecoins from Circle. The market shows growing demand for Solana-based essentially ETFs while the announcement takes place. Research analysts see this pattern as an increasing proof of confidence from institutions regarding blockchain infrastructure. And following Build's expansion, Solana's native cryptocurrency SOL is trading at around $144. The development essentially has fueled speculation about the potential shift in market dominance. However, trading volume has adjusted to $3.35 billion after initial surge essentially tied to Polymarket's integration. So, Solana is about to be added to BlackRock's essentially Build fund, which is major news. Honestly, for Solana, it's major news without a doubt. But also, again, just to point this out, this isn't directly through BlackRock. It's through a third party of BlackRock, where Solana is going to be added to the table, or to the mix, you could say, essentially, because they see Solana as a better outcome than Ethereum when it comes to essentially, tokenization, which makes sense because Ethereum is expensive as hell. And it's never made sense to anyone using Ethereum, because in some cases on Ethereum, you want to send, for example, you want to purchase $60 worth of something, and you're paying like $20 in fees, which makes Ethereum pretty much redundant, because a bank essentially purchase would be cheaper than using Ethereum in some cases. If you're somebody inside the UK and you want to make a purchase using, for example, HSBC Bank or Lloyd's Bank, and you go into a shop and you make a purchase, you're pretty much paying zero to minimal fees. But if you use Ethereum bank card, essentially making that purchase, you could pay $20 in fees or $30 in fees, which also always just made Ethereum redundant in any sort of way being used as a payment system or payment tool in any sort of a way. And Ethereum, till this day, still hasn't fixed that issue, even though they claim they're going to year after year. They still haven't done it. But anyways, well done to Ethereum making it through the third parties to essentially be added to BlackRock's fund. It's amazing news for Ethereum holders. Now, moving on to a major giant bank announcement. But before we go through that, let's go inside the comment section first. So before we go through the major giant bank announcement, let's go inside the comment section first. As I said previously, this is live, which means if you do have a question, put it down inside the comment section. Be more than happy to answer the questions you may have. So let's go inside the comment section first, and then we go straight into afterwards the giant bank announcement news. Let's see where we were at. We were at here, I think it was. We were at, yeah, here. Good evening, Miles. How are you? I'm doing great, Cali. Good to see you. How you doing? How you been? Evening, Miles and CMF. Pierce, let's go. How you doing? How you been? Almost there. Let's go, Stormy. Facts, we're going to replicate. This will be a challenge. Hi, Miles and family. Alex, good to see you. How you doing? How you been? Hi, Miles and CMF. George, good to see you. How you doing? How you been? Morning, Miles and CMF. Shelly, good to see you. How you doing? Morning. How you been? Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been? Hi, Miles. Hope you're well. Zach, good to see you. How you doing? How you been? Hello to my CMF. I'm sorry too late, Scott. Don't worry about it. You're still in perfect timing. Good evening, brother Miles and the rest of the XRP army. Let's go, funky brother. I've just reposted the live, and I urge everyone to do the same. Please retweet and like the live. Yes, please do if you already haven't done that yet. CMF members, if you haven't liked and retweeted this live and you're watching this on X, please take a second to like and retweet this live and even hashtag the XRP army outside the live, because we have a lot of XRP news to go through towards the end of the live as well, or towards the middle and end. Evening, even the US upgrading essentially their payment systems. Facts. Evening, everyone. Davey, good to see you. How you doing? How you been? CBDC being the key word from Brazil. Yep. Good evening, Miles and CMF. Bull XRP, good to see you. How you doing? How you been? Happy Pisces, good to see you. How you doing? How you been? Morning, Miles and CMF. Hope everyone is well. There isn't upward price movement for XRP after all the positive news. Do you have any idea? Yes. The reason why XRP didn't shoot up to the moon in any sort of a way on this essentially, SEC and Ripple announcement is due to essentially the case isn't technically over, but it technically is in some sort of a way, which, towards the end of the live, I'll explain what I exactly mean by that. Even Miles, Lee, good to see you. How you doing? How you been? Towards middle and end of the live, I'll tell you what I exactly mean by that. Greetings, Miles and CMF. Ray, good to see you. How you doing? How you been? Hi, Miles and family. Golden Dragon, good to see you. How you doing? How you been? So, giant bank. Which giant bank is this, and what's the announcement? Boros Bank. It's a French bank, has decided to enter into the crypto space. It's a giant bank in France, and it's decided to enter the crypto space to, follow on suit with the rest of the banks and major institutions, coming inside the crypto space. So here it is. Finally, the wall of distrust is crumbling when it comes to the crypto space. And Boros Bank, a French giant online essentially banking, takes a historic step by integrating crypto ETPs into its offerings. A remarkable turnaround for its essentially subsidiaries of Societe Generale, which has long been a distant from digital assets. By partnering essentially with CoinShares, a European leader in the field, the platform essentially opens a branch or a breach essentially of traditional universes of finance. Bitcoin, Ethereum, and XRP. These essentially names now resonate in the portfolios of ordinary investors. It's nice to hear Bitcoin, Ethereum, and XRP being the three top tokens right now in portfolios for these high-profile players, especially for this bank. These names has now resonated in the portfolios of investors. One more step towards normalization of cryptos, and much more, a silent revolution. The decision is surprising, but is necessary. After years of resistance, Boros Bank in France embraces cryptocurrencies with a structured offering. 5 ETPs from CoinShares' essentially physical range land on its platform, including 3 accompanied by staking rewards of up to 3% annually. A calculated essentially strategy to attract a essentially cautious audience by offering a regulated and familiar framework. Adoption comes through trust. and emphasizes Gene Murray, essentially the CEO of CoinShares. The bank relies on its reputation to reinsure transforming the perception of essentially market once essentially viewed as a market space nobody wanted to touch, and now the banks and institutions are jumping all over it. The numbers speak for themselves. With 7 million clients and record growth in 2024, Boris Bank has a weight necessary to influence the mindsights. Its crypto offerings is not just a gimmick. It targets a diverse clientele from novices to seasoned investors. Competitive fees, 0.25% for Bitcoin ETPs, for example, and the absence essentially of cost on stake products enhances the appeal. And essentially, the demonstration of the progress far from the cliches of risky speculation. This movement is not isolated. It reflects a European trend right now where institutional investors are gradually essentially approaching the digital asset space. It's true. Yesterday on this live, I essentially released the news of PwC, a massive, ginormous Italian company. PwC decided yesterday to enter the blockchain space. And the first essentially category they're entering into is the data section. But they decided to enter the blockchain space. So it is definitely a trend that's happening in the EU. And before that, there were other European essentially companies, mostly based out in Germany or Belgium or Austria, that was joining the market space. Even Switzerland is doing major movements as well. Now, by choosing essentially CoinShares, Boris Bank partners with an established entity whose products are listed essentially on Euronext. A strong signal. Cryptos are no longer essentially the space where nobody wants to touch. It's becoming a very specialized essentially exchange. And traditional finance is regaining control without renouncing its DNA. Behind the enthusiasm, one question persists: how to guarantee the security of investments. CoinShares provides a sharp answer through essentially physical replication. Each ETP corresponds to the underlying asset stored essentially with Kumio as an independent custodian. If a client invests $50 million, we buy the cryptos in real time. It explains Jeremy Castell of CoinShares. And essentially, unyielding verification chain validated by a third party ensures traceability. Even in the event of CoinShares bankruptcy, the cryptos remain untouched. This operational transparency serves essentially a bulwark against abuse. Investors gain access to complex essentially products without essentially confronting the technicalities of private wallets when it comes to the crypto space. CoinShares is basically offering what Coinbase offers to BlackRock. And CoinShares is offering is this, essentially to an EU company, massive EU bank. Boris Bank plays a bridging role here, simplifying access while maintaining and safeguarding essentially. And staking, often perceived as an obscure essentially practice, becomes an automated and secure mechanism through this venture. Rewards are credited without manual essential interventions and eliminating risk of error. Finally, this initiative shakes up the codes of the French market space by integrating cryptos into its standards offerings. Boris Bank legitimizes a class of assets that is still essentially marginalized. Individuals can now diversify their PEAs or securities accounts with hybrid products in France, blending traditional stock market practices and blockchain innovation together. An advance that essentially that could inspire other players to accelerate essentially their integration of cryptos into global financial ecosystems. In the meantime, Kraken is also seeking a $1 billion IPO as well, which we talked about yesterday on this live as well. But honestly, we're seeing more and more banks and institutions around the world starting to enter the crypto space. And especially with the United States, because this all goes back to the biggest market space on the planet, which is aiming for, the title of the capital of cryptocurrencies. The more the US keeps on aiming for the title of becoming the capital of cryptocurrencies, the more that's going to make other institutions or banks around the world see that this is definitely here to stay, because it's not some small or minuscule market space that's trying to boost up the crypto space. This is the biggest market space on the planet, which boosts confidence for other institutions and banks around essentially the world in different jurisdictions to enter the crypto space. And especially when you see, PwC from Italy coming out yesterday and saying they want to enter the crypto space, which makes Boris Bank essentially today from France come out and say, we want to enter the crypto space. And the more we see this happening as we go forward this year, especially, a lot of announcements going to be made essentially this year in terms of regulations, more bank news, more institutional news, and regulations as up to utility news. A lot of these things are going to be happening this year. And all this is going to be very extremely positive for the crypto space. And again, it's all because of the Trump administration. It's because of Trump. Every good thing that's happening for the crypto space and the banks, institutions, and the crypto space around the world is because of Trump. The more America aims for the capital of cryptocurrencies, the more other countries are looking at the footsteps America takes. And it's not just my words. Hong Kong has said they're looking at the footsteps America takes. South Korea said they're looking at the footsteps America takes. Japan said they're looking at the footsteps America takes. So does Singapore, so does Dubai. And the list goes on of the amount of essentially institutions that are, essentially looking at, or even governing bodies that are looking at what the next steps are going to be for Trump essentially moving forward in this crypto space. And that's where you have Boris Bank coming in from France and going, we want to enter the crypto space now. It's time. And this is going to add tremendous capital with every bank institution around the world entering the crypto space bit by bit. It's going to add tremendous capital. And when regulations comes in, that's going to add even a bigger capital, because that leads to utility, which is the main purpose of cryptocurrencies. Now, North Carolina is what we're going to talk about next. So moving off France and going into North Carolina. North Carolina has just proposed a new bill for their state regarding cryptocurrency investments. So, North Carolina proposes a bill for state cryptocurrency investments. Introduced the 2025 State Investment Modernization Act, that's proposing a new essential investment management authority led by the state treasurer to invest into digital assets. This legislative move essentially signifies an increased interest in cryptocurrencies as public reserve assets, contributing essentially to the broader state level adoption trends in the US. The House Bill 506 proposes the establishment of an independent NC investment management authority to allocate 5% of the state funds in digital assets. The baptism essentially efforts aims to modernize the state's investment strategies. Republican Representative B. Jones, essentially, and Tyson and a few other Republican representatives are marking a significant policy shift. The bill introduction follows an earlier proposal aimed at essentially going 10% of public funds into Bitcoin, but then they came to the conclusion of 5%, but also broadening the range, not just towards Bitcoin, but towards crypto assets. So essentially, North Carolina is following the footsteps of the digital stockpile rather than the Bitcoin reserve, because a digital stockpile always makes a lot more sense. Diversification makes a billion times more sense than putting all your eggs in one basket, which is a Bitcoin essentially reserve. Diversification always makes a lot more sense. When it comes to any investment, you could be in the stock market, diversification always makes more sense. Crypto market, especially in the crypto market. Now, financially, essentially, immediate essentially reactions suggest that potential cryptocurrency investments could influence Bitcoin and other digital crypto asset prices. However, the emphasis on this essentially secure storage audits reflects a prudent essentially approach as well. Financially, North Carolina move acknowledges digital assets as substantial state reserves. By aligning the states like Texas and Arizona, North Carolina is pushing forward in terms of US state-level cryptocurrency adoption. An interest in employing cryptocurrencies as a state reserve indicates potential essentially influences on fintech regulations going forward as well for all these American states. This could spark a technological innovation in secure digital asset management, benefiting from state-level economic policies and other wide-range essentially regulations to benefit for the crypto space moving forward in all these American states. And B. Jones, representatives of North Carolina House of Representatives, said, "This bill reflects a significant step towards modernizing our state's investment strategies and embracing the potential of digital assets moving forward," essentially, which is facts. I mean, there are 21 American states that have applied for some sort of either a Bitcoin or a crypto stockpile reserve. North Carolina applied for a digital asset stockpile rather than Bitcoin reserve, and it is passing through essentially. Which, again, as I said many times, it always makes more sense to diversify your portfolio and never put all your eggs in one basket. But that also in itself is incredible news, absolutely incredible news. Moving on from North Carolina to Berkshire Hathaway. Now, for the longest time, Berkshire Hathaway has said that they're not interested in cryptocurrencies. For the longest time, they've said this. They said they will never get involved in cryptocurrencies in any sort of a way. But if you know anything about essentially major institutional players, is that they tend to lie. And if you ever want to find out the truth of the movements from these institutions, it isn't looking at what their CEO says, it's more at looking at their investment portfolio. And one of the investments essentially that Berkshire Hathaway made a long time ago was in a crypto-friendly bank in Latin American countries, which was by the name of Nubank. Nubank has just made an announcement today, and they're adding more tokens essentially for their bank to be purchased by Latin American clientele. And the new tokens they're adding is ADA, Cardano, NEAR, and Atom to their crypto offerings to essentially Latin American clients. Nubank, a Latin American financial bank backed by Warren Buffett's essentially Berkshire Hathaway, has expanded its crypto offerings by adding 4 other altcoins to its portfolio. The bank is adding Cardano, NEAR Protocol, Cosmos Atom, and Algorand essentially to its 100 million clientele. Nubank has 100 million essentially 100 million client list, which is incredible, and it's essentially in Brazil. It's based out of Brazil. According to essentially their major announcement that came out today, the 4 coins had combined a market capitalization of $34.6 billion at the time of writing. Nubank's revenue grew to nearly $3 billion at the end of 2024 from $245 million in the first quarter of 2021. Now, statistics data shows that the 4 traditional coins will bring Nubank's crypto total offerings to 20 tokens. If you're wondering to yourself, what other cryptocurrencies does Nubank offer essentially to Latin American countries or to their 100 million client-based customer service? Well, they also offer other tokens, for example, like Bitcoin, Ethereum, Solana, XRP, USDC, and a few other ones. And now obviously adding Cardano, NEAR, and essentially Atom and Algorand. Now, Warren Buffett's Berkshire Hathaway has invested in Nubank multiple times, even though Warren Buffett has stated multiple times he's against crypto assets. He's against essentially this, speculative future we're heading towards digital assets. It doesn't make any sense for him. But even him, who has lied multiple times of being against crypto space, has invested multiple times in this crypto-friendly bank, essentially based in Brazil. Warren Buffett's Berkshire Hathaway has invested in Nubank multiple times. In 2021, Berkshire Hathaway essentially invested $500 million in Nubank's Series G funding round, an amount later followed by an additional $1 billion from Berkshire Hathaway. For a man that doesn't like the crypto space and calls it speculative, he's willing to spend $1 billion on it. From 2022 to 2024, Warren Buffett's company increased its ownership stake in Nubank from 0.4% to 0.4% from the 0.1% they originally owned. Now, Nubank has been dividing into digital assets, has been essentially diving into digital assets since 2022, when it announced the allocation of 1% of its net assets into Bitcoin and it started offering crypto services back in 2022. In October 2022, the company revealed its plans to launch its loyalty tokens on Polygon's blockchain as well, and it discontinued the servicing in 2024. Now, Brazil is the largest company, essentially, this is Brazil's largest company in Latin America, with a gross domestic product of a GDP of approximately $5.4 trillion in 2024, a perspective coming out from data coming out from World Economic Forum. The country's cryptocurrency market has experienced significant growth for the past few years, with stablecoins accounting for 90% of all crypto transactions. And in January 2025, Binance became the first crypto exchange to secure a broker deal license to operate in Brazil. UK fintech Revolut Bank has also entered the country's crypto market space as well. And also today, Revolut Bank has announced their new crypto exchange app. I don't know if anybody's seen it. It's called Revolut X. And also in 2024, Brazil led crypto trading volumes in Latin America with $6 billion in traded. The country's lawmakers are currently considering allowing salary payments in Bitcoin as well, and also in stablecoins, if I'm not mistaken. But in general, a major crypto-friendly bank with up to 100 million clients, based out of Brazil, backed by Berkshire Hathaway, which is essentially Warren Buffett, a man who hates the crypto space but is willing to invest $1 billion into the crypto space. This is why you should never, look at what they say. Instead, look at what they do, and it tells you what their next moves are going to be. But 4 tokens are added to the list: Algorand, Atom, Cardano, and Near are added to the list. XRP, Bitcoin, Ethereum, and Solana were already on the list of purchases for these clienteles. Now, moving on from Berkshire Hathaway and Latin American countries to Kentucky. Before we talk about Kentucky, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'm more than happy to answer the questions you may have. So let's go inside the comment section first, and then we'll go straight into the Kentucky news. We have a bit more news essentially to cover on tonight's live as well. A lot more news to cover on tonight's live, actually, to be fairly honest. Okay, let's see where we were inside the comment section. Hi, Miles. Good to see you. How you doing? What is good news for XRP? Tremendous good news for XRP is regarding Ripple case essentially being dropped in some sort of a way, which we're going to go through on tonight's live. Hello, Miles. What about XRP? Will it benefit one if they owe an XRP to purchase XRP ETF? It becomes available. Yes. If there is an XRP ETF for Boris Bank, and essentially based in France, if there is an XRP ETF for the French trade market, essentially services, then yes, it could benefit from that matter as well. How will the stablecoin bill bring utility to XRP? How will the stablecoin bill bring utility to XRP? Well, RLUSD is essentially a stablecoin on the XRP ledger. If stablecoin regulations pass, one major thing that's going to be happening is that they're going to say which stablecoins can operate inside the United States next and which can't. And we know for up to a certain extent that USDT, America's not fond of USDT in any sort of a way at all. It's because USDT is the #1 stablecoin, pretty much, that is the US dollars on the digital market space, but isn't American. It's not owned by America, and America has 0 shares in Tether, which America's not really fond of that. The biggest stablecoin cannot be the US dollars that America doesn't control. Logically, it makes 0 sense for the market space. Also, the amount of money that's spinning inside of USDT from China's market space doesn't reassure that factor for the US even more. So, with a stablecoin essentially bill or a Genius Act that's going to be passed inside the United States, there has been talks by congressmen themselves where they're thinking about that if they don't approve certain stablecoins, like USDT, for example, then USDT is not just not allowed to operate inside the United States, but it's not allowed to operate worldwide. Where, in a way, America might even decide to sanction Tether as a company up to a certain extent. Because what they're thinking about introducing is that if a company like Tether that's created USDT isn't allowed to sell USDT inside of America because it's not showing transparency, it's not regulated by America, then USDT is not allowed to be sold to other Americans outside of the US either, because they could be impacted by the repercussions of USDT ever depegs and goes down, or they've lied about essentially their backings, for example, which could lead to sanctions on Tether up to a certain extent. Now, why is that beneficial? Well, because somebody has to take Tether's replacement. Somewhere down the line, somebody has to replace USDT. And it's going to be RLUSD, between RLUSD and USDC. Now, obviously, USDC has had a much more larger foot in this matter, you could say. They're much more well ahead than RLUSD. They're ranking second behind USDT. So obviously, they'll be ahead for a little while. But in general, RLUSD has better transparency, to be fairly honest. USDC has depegged once. RLUSD has never depegged. It has a much more larger backing behind it as well. And I do believe over time, RLUSD will definitely overtake it. And it's also on the XRP ledger, which adds liquidity to the XRP ledger, which also stablecoin regulations means RLUSD does well as liquidity to the XRP ledger, which is beneficial for XRP because it brings more users on the XRP ledger. So it'll have indirect value for XRP. Now, so I hope that answers your question. Why is it good for essentially RLU? What's the stablecoin bill going to do for the XRP ledger? Well, it's going to add indirect value. Good evening, Miles and CMF. Or good to see you. So how you doing? How you been? So that's what's going to happen essentially. Scott, good to see you. So how you doing? How you been? What happened to Matic? I don't see any data on CMC any longer. It should be there. If it isn't, that's a bit weird. Maybe there's a bug in the system. Let's go, Miles. Share the live. Let's go, Scott. Miles is Viot. The ticker for Vio is a dead project as my balance from 2,000 down to 200. I don't know what to do with it. Am I going to lose the 200 as well? Maybe. I got rid of Viot a while ago, essentially, on my updated portfolio. I got rid of Viot a while ago. But if it still has backing from IBM, wait for the market to essentially pick up itself. The Viot should bounce back. If you want to jump out for $200, it's completely up to you. But they still do have that backing from IBM, and it's just the market's very edgy space right now due to all tariff situations and inflation reports that are coming out and so on. But if you want to jump out with $200 and put that $200 to better use in a different project, then by all means, it is your money. You have all the choice in the world to do that. If you want to see what happens essentially with your $200, will it go back to $2,000? Then you could also sit on the sidelines and see what happens. I'll give you a little small story, very small story. The first time I learned about patience inside the crypto space, and again, this might not work out for every project. Let me just make this one thing clear before I say what I'm about to say. This method that I used might not work out for every project. But the first time I learned patience inside the crypto space was I put essentially 600 pounds, 600 British pounds on one particular crypto project. I put 600 British pounds on one particular crypto project. And the project's name was, actually, I'm not going to tell you the project name, but it was a genuine project and it's still around. This project is still around. I put 600 pounds on this project. And within a space of a few months, it went down to 300 pounds. So my initial essentially purchase of this crypto project, and I brought it through crypto.com, and I brought it through essentially crypto.com. And I put 600 pounds. In a few months, this project went down to 300 pounds. And I thought to myself, look, I've lost 300. I could lose another 300, or I could, essentially just see what happens. So I thought to myself, I'll see what happens. And this is the first time I ever learned how to do, I learned how to be patient inside the market space a lot more. So 600, 300. Few more months pass, nothing. Few more months pass. That 600 that went down to 300 went all the way up to 28,000 pounds. And that is essentially when I learned the game of patience. Because I went down from 600 to 300 and I could have pulled out and said, I've lost 300 already. I could take my 300 pounds and go somewhere else. Instead, I decided to just leave the 300. I thought, look, I'm in 600. I've lost 300. In a few months, I've lost 300. What's the worst that can happen? I lose another 300. Call it a day on this project. Left it in. Few months pass, nothing. Few months more pass. It goes down. Essentially, it goes up to around 28,000 pounds. And that is when I learned the game of patience. And again, this might not work out for every project. This method might not work out for every project because the project I went for was a legitimate project. I'm still not going to tell you what it was, but it's a legitimate project. I brought it through crypto.com. It's still on crypto.com for sale and on many other exchanges around the world. It's on Binance. It's a very old project, but it's still sticking around and it's still doing well for itself. But that is when I learned the game of patience. So regarding your question of Miles, you brought Viot, the ticker of Vio. The project seems dead to you, and essentially you brought in at $2,000. Now you're down to $200. You're thinking about jumping out. You can if you want to. You honestly can. You have every right to jump out of that project if you want to. Or the different perspective would be you're down, you brought in $2,000, you're sitting at $200. If you lose $200, or you could just pull out $200. It's completely up to you. But as far as I'm aware, they still have that partnership of IBM. So it's completely up to you. You can let that 200 ride, or you can take it out. But I just wanted to share you that story of when I learned the game of patience. But again, that method might not work out for every project. Miles, are you still standing strong on your opinion about XLM? Yes, I'm always standing strong on XLM. XDC, yes. HBAR, yes. Algo will do good for itself in the EU market space. ADA, yes, mainly because it's also a part of that stockpile. Is a stablecoin bill basically a CBDC? No, a stablecoin is very different to a CBDC. A CBDC is a much more programmable, essentially, token. So a CBDC can be controlled in every aspect. It can also be attached to a social credit system, which is something that was discussed in the World Economic Forum event back in 2024. In 2024, the World Economic Forum, they were talking about essentially CBDCs. They were talking about COVID and COVID passports. And they said COVID passports were the first step to see if people are acceptable of digital identities. So COVID passports were the first steps of a digital identity. And they discussed this in the World Economic Forum 2024. And essentially, they also discussed social credit systems being attached to CBDC wallets. So a CBDC is very different to a stablecoin. A stablecoin has one purpose, which is essentially an FX market space scenario. So, essentially back and forward, and the price always is pegged either to the dollars or to the pounds or to the euros, whatever stablecoin it may be. But it's not programmable the way a CBDC is, where they can essentially freeze assets or seize assets. Now, we are seeing that trend happening on USDT, where they're freezing people's wallets because of illicit activities. But still, a CBDC has a lot more programmable features that a stablecoin has. One of them essentially in that social credit system. But no, they're not. They're similar, but not exactly the same in any sort of way. What country is this? United Kingdom. Your top 5 essential crypto picks in order. My top 5 crypto picks in order: XRP, XLM, XDC, HBAR, AVAX, or ACH for number 5. Or even essentially Cardano as well now, because entering essentially into that crypto stockpile, even Cardano sitting at 5th. It was Terra Luna. The crypto project that I entered into, it was Terra Luna. Nope, it wasn't Terra Luna. No, it was not Terra Luna. If it was Terra Luna, it would have went down to 0. Actually, on Terra Luna, I shorted Terra Luna into the ground. Binance was the only crypto exchange at that time that was still letting you trade on Terra Luna. So every crypto exchange, because of the depegging situation of Terra Luna, every crypto exchange decided not to essentially allow trading, but Binance was the only one that let trading happen. And at that time, so when every exchange was just stopping and freezing assets from Terra Luna being purchased or traded or shorted or longed in any sort of a way, Binance was the only one. So I ride the Terra Luna to the ground on shorting it, and then I bought it right at the bottom when it hit rock bottom. When Terra Luna hit rock bottom, I brought it, and about a few minutes later, Binance stopped all essentially purchasing, and I thought I lost my investment on Luna at the bottom when I brought it. I thought, I'll risk it, and I went to sleep, woke up, and it was up incredibly. So that was a good day, actually. Now, let's go back to the questions. My uncle made it big in crypto back in 2017. Money went to his head, got caught mining with his one. Locked up since. Biden left him to rot. Dakota Kid. Interesting. Miles, interesting for the story, Dakota Kid. Miles, do you have any updates on the digital assets from Switzerland? On the digital assets from Switzerland, one of them launched. It didn't do a very great launch, but one of them launched. It wasn't. Then it was Lunacy. It wasn't Lunacy either. It starts with a H. Hey Miles, what are the top B2B cryptos? I tried googling this. All I got back was a bunch of gibberish about crypto blockchains, not actual crypto itself. Thanks. The B2B essentially is crypto projects for transaction basis, so payment crypto projects. So the payments category, which is the XRP category and so on, it's the payments category. Bitcoin's category as well, because it's a financial project, even though it isn't. I'm so glad you mentioned ACH. I was beginning to think you had lost faith in the token. No, I haven't lost faith in the token, Joe, in any sort of a way. It's still there on my list. But yeah, B2P is just transactions category, the transaction category in general for the crypto space. Now, Kentucky passes Bitcoin rights law essentially to protect crypto users. If you want, I can send you a list for me after the live of B2B essentially crypto projects, but it's just transactional crypto projects. Kentucky's governor, essentially Andy, has signed the Bitcoin rights bill into law on essentially today in 2025, making it official that people in the state of Kentucky can use, store, and mine Bitcoin without essentially rejections or restrictions. The bill known as the House Bill 701, coming out of Kentucky, passing essentially the bill today, was introduced by Representatives Adam Bowling on February 19th and quickly moved through the Senate legislature. It passed the House with a unanimous vote of 91-0 on February 28th, and they got a full approval in the Senate with a 37-0 vote on March 13th, and the law essentially protects crypto users from discrimination and prevents local governments essentially from making unfair rules against Bitcoin mining. It also makes sure mining and staking don't require essentially special licensing or get classified as financial securities. The Satoshi Action Fund, a crypto advocacy group, praised essentially the law, saying it guarantees essentially the right to self-custody node, a full-on node, and use digital assets without fear of discrimination. And this means that people in Kentucky can hold their own cryptos without needing any third party, essentially businesses that can run blockchain systems without extra restrictions in any sort of a way. And the bill also stops local governments from passing and zoning laws that could push Bitcoin miners essentially out of the certain areas. And the idea is to create a much more friendly environment in Kentucky for Bitcoin miners. Not also that, but for people who are inside the crypto space in terms of protecting themselves using cold wallet storages. In addition, lawmakers are also looking at another proposal that will allow the state to invest into Bitcoin as a part of its financial reserves. If approved, the State Investment Commission could put up to 10% of their essentially excess state funds into Bitcoin and other digital assets as well. This comes at a time when other states like essentially Oklahoma or Arizona and Missouri are also considering similar essentially Bitcoin reserve plans. Oklahoma's essentially straight Bitcoin Reserve Act just passed this essentially House of Representatives with a 77 to essentially 15 vote and is now waiting for approval in the Senate. Meanwhile, Arizona has moved ahead with essentially 2 Bitcoin reserve bills that recently passed a key summit and are headed for a full vote as well. And according to Bitcoin laws, obviously we talked about Oklahoma a little bit earlier on the live as well, who has passed a similar one, but theirs is more of a crypto stockpile rather than just a Bitcoin reserve. Now, Fidelity is what we're going to talk about next, essentially. Fidelity joins BlackRock's Ethereum, essentially asset-based tokenization. Fidelity Investments has made a major announcement today and is expanding into the blockchain space with an Ethereum-based on-chain share class for its US dollar money market fund. The $5.8 trillion asset manager joins BlackRock and essentially Franklin Templeton in tokenizing financial assets. Fidelity filed with the U.S. Securities and Exchange Commission on March 21st, pending approval on the on-chain share class with launch on May essentially 30th. The initiative reflects the rising demand for tokenized essentially real-world assets within traditional finance. The on-chain shares class will track transactions on Fidelity Treasury Digital Fund, an $80 million fund investment mainly in U.S. Treasury bills. However, traditional essentially book entry records will remain the ownership, essentially official ownership ledger, and Fidelity will essentially be the blockchain transactions with its official records daily. Fidelity clarified that US Treasury bills themselves will not be tokenized. Instead, the fund shares transactions will be recorded on Ethereum. And this approach essentially aligns with other asset managers utilizing blockchain for enhanced essentially transaction visibility and efficiency. Ethereum continues to dominate institutional tokenization efforts. And BlackRock's head of crypto, Robbie, emphasized that Ethereum is a natural choice for traditional finance, and firms looking to tokenize real-world assets, this is essentially the place to be with Fidelity. He highlighted its decentralization, security, and credibility as key advantages. Currently, over essentially $3.3 billion worth of real-world assets are tokenized on Ethereum. Stellar also follows with $465.6 million in tokenized assets, XLM. And the broader real-world asset tokenization market for treasury products is valued at $4.78 billion, with BlackRock's USD Institutional Digital Liquidity Fund bill leading the way with an absolute massive portfolio of $1.46 billion. Fidelity's move showcases the increasing integration of blockchain into mainstream finance, and Cynthia, also Fidelity's digital asset management head, sees tokenization as a transformative area. She believes it can enhance transactional efficiencies and capital allocation across markets. Moreover, tokenized assets could optimize collateral management. Posting essentially tokenized assets as non-cash collaterals may streamline essential operations and boost capital efficiency, and essentially more institutional players may explore blockchain for asset management, with Fidelity's announcement coming out as well. It's definitely going to show a lot more confidence to the market space, without a doubt, with a major firm like Fidelity, joining the tokenization space, even though we have BlackRock and a few other big players as well. But having more big players join the rankings of tokenization adds a lot more credibility to the market space, without a doubt, by a mile. Now, moving forward, SEC. The SEC, we're getting closer to the very, very top of the range news right now. The SEC has recently done, essentially the SEC roundtable for the crypto space, the first one they ever did. And we talked about what they discussed and bullet points and so on. Well, it seems like the SEC wants to do a lot more crypto roundtables, and I have the timelines. So here is what's going to be happening with the new SEC. And by the way, this got announced today with the Ripple news as well. But here it is. The SEC sets the stage for new cryptocurrency regulations with upcoming roundtables. They're setting the new regulations with upcoming roundtables. The announcement was made today, the same day the announcement for Ripple was announced. Each meeting will take place at the SEC headquarters and will be broadcasted live. Commissioner Hester Peirce, essentially the leader of the cryptocurrency task force, stated that the roundtable discussions inside the SEC provide an opportunity for experts to engage in likely discussions regarding regulatory issues and potential solutions. In the coming hours, a vote will occur on Paul Atkins, essentially a former appointee. Mark is expected to transfer his temporary duties to Paul Atkins shortly as well, indicating the SEC will be taking significant steps concerning cryptocurrencies. The schedule is extended into June, essentially suggests that comprehensive regulations will be created, potentially establishing essentially a global standard for crypto legislations, affecting not just the US, but also the global cryptocurrency legal landscape. Under the Trump administration, the SEC has shifted its approach majorly towards cryptocurrency regulations. The establishment of cryptocurrency task force marks a departure from previous practices, signaling the end of negative discrimination against digital currencies. This new era is categorized by a more inexclusive and transparent regulatory approach for the crypto space. Comprehensive regulations concerning cryptocurrencies are definitely on the horizon, to facilitate this, and the cryptocurrency task force is organizing a series of roundtable discussions with industry representatives. And the first essentially of these meetings was held recently, with 4 additional sessions already announced by the SEC today. The cryptocurrency task force of the Securities and Exchange Commission will conduct 4 more roundtables of terms of discussions addressing ongoing cryptocurrency asset regulations. The data and the topics for each roundtable are as follows. So here it is. If you want to put it down in your calendars, this is what the SEC is going to be discussing on these particular times. And also, it's going to be broadcasted live. So it's going to be transparency, with essentially whatever they're going to be discussing at these roundtables. But we know the titles of the topic and we know the dates. Here it is. April 11th, 2025. The SEC has a discussion of a roundtable on live broadcast about essentially adapting regulation for cryptocurrency trading. April 25th, 2025, recognizing your custodians, key considerations for crypto custody. So essentially, April 25th, they're going to be talking about crypto, essentially storage wallets, cold storage, and hot wallets, and so on. And April 11th is going to be about rules and regulations for cryptocurrency tradings. May 12, 2025, tokenization and moving assets on chain where TradeFi meets DeFi. So on May 12, 2025, they're going to be talking about inside the SEC, again, live broadcast, full transparency about regarding tokenization and the traditional market space connecting to the DeFi market space. On June 6, 2025, the SEC is again going to do another roundtable on live broadcast, full transparency, talking about DeFi, and they're calling it the American Spirit. So those are the timelines for the SEC's new roundtables coming up, talking essentially all about the crypto space, trying to bring the regulations in the United States. And this was announced today regarding cryptocurrency rules and regulations, a sit down for crypto wallets, tokenizations, the traditional market space connecting to the essentially crypto market space, and so on. And then also today, we had the FDIC come out. Now, recently, the OCC came out straight after the White House Crypto Summit and stated that banks are allowed to start using crypto assets. Obviously, OCC was heavily against crypto assets, but after the White House Crypto Summit, they did come out and say that 2 banks, they can start utilizing crypto assets, slowly if they want to, and hold them as custodians and so on. And you fast forward from the White House Crypto Summit to today, with the FDIC essentially moves to eradicate the risk category from bank exams. Banks have a risk category, which means if they see a particular, firm out there that they may consider in their risk category, they wouldn't touch it with a 10-foot pole. The FDIC wants to get rid of the whole, essentially discrimination of the risk category, because banks are putting essentially were putting blockchain firms in the past into the risk category where they don't want to touch them. And that was also because of the previous FDIC chairman that was sent 20, and CFPB chairman that sent 20 emails to banks to not work with crypto companies. So here it is. The U.S. Federal Deposit Insurance Corporations today came out. The independent agency of the federal government is reportedly moving to stop using the risk category as a way to supervise banks. Now, who they're mostly talking about here is not the banks themselves, because banks want to work inside the crypto sector. Who they're referring to is the politicians that are using their power, essentially, through whatever maneuver they may have, that are controlling banks by saying, this is, the risk category law where you're not allowed to work with crypto companies because of this and that. And that is why the FDIC is stepping in to stop those corrupt politicians from pulling strings and stopping banks from working with crypto companies. Because the banks want to work with crypto companies. The FDIC is just mentioning, to the corrupt politicians, stop pulling strings. The banks want to work. We want the banks to work with blockchain companies, and full stop. According to the letter sent by the agency acting chairman Travis Hill to Rep. essentially Dan, banking regulators should not use the essentially risk to scrutinize firms, and the firms that scrutinize is essentially blockchain firms. While a bank's reputation is critically important, most activities that could threaten a bank's reputation do so through traditional risk channels, credit risk, market risk, etc. That supervisory already focuses on. Notes the letter, first reported essentially by The Political. According to the document, the FDIC has completed a review of full mentions of the risk in its regulations and policy documents, and has plans to eradicate this concept from the regulatory approach, which means, no longer Senator Elizabeth Warren or Nancy Pelosi or any people like those two morons or Pocahontas are going to be pulling strings in any sort of way to stop banks from working with crypto companies. If they eradicate this whole risk factor to it, then banks can start utilizing crypto assets, and politicians can't pull strings to make sure they can't because of that one particular scenario. And that scenario is about to go away. The Federal Reserve defines essentially the risk as the potential that negative publicity regarding an institution's business practices, whether true or not, it will cause a decline in customer base, costly litigations, or revenue reductions. And the FDIC letter especially mentioned that digital assets with Hill, noting that the agency has generally been closed for business for institutions interested essentially in blockchain or distributed ledger technology. Now, as per the document, the FDIC is working on a new direction for digital asset policies, aiming at providing banks a way to engage with digital assets. The FDIC, who was incredibly against crypto assets, who sent 20 emails on the Biden administration to banks to not work with crypto companies, is now the same governmental organization that's coming forward today, out of all days, to make the announcement they're going to eradicate, the law that essentially was placed on banks of risk category. That's why they couldn't touch crypto assets, and essentially saying it to the politicians: stop pulling strings, let the banks work with crypto companies. And the FDIC essentially stating themselves that they're trying to find a way now, announcing today, that to try to find a way to provide banks a way to engage with digital assets. Now, the letter was also sent in response to a February communication that was done and other lawmakers with recommendations for digital asset rules and ways to prevent essentially debanking. Industries deemed as risky to banks often face significant challenges in establishing or maintaining banking relationships. The crypto industry faced such challenges during what became known as Operation Choke Point 2.0, the unofficial operation led by more than 30 technology and cryptocurrency companies being denied banking services in the United States after the collapse, essentially, of crypto-friendly banks earlier in 2023. Now, Ripple. Ripple gets the announcement essentially that was made today with the FDIC essentially, and with essentially with the announcement from FDIC and the announcement from the SEC coming both today. SEC announcing multiple roundtables for regulations this year. FDIC saying from now banks should be able to work with essentially, and they're going to eradicate the risk factor. Both announcements came today. What also came today was this. The timeline was very interesting, which was the Ripple announcement. Ripple gets a $75 million discount, you could say, pretty much, from the SEC. So Ripple had to originally pay $125 million to the SEC after the appeal was essentially removed from this lawsuit, which was massive news. The SEC essentially removes their appeal and so on. And I said it's going to happen because there was no other option. This SEC is pro-crypto. And the relationship that essentially Ripple has now with Trump put a lot more pressure on the SEC to get things done faster, which they had no choice about. With XRP being announced in that digital stockpile, the first asset to be announced, put essentially more pressure on the SEC to move forward and dismiss this case in some sort of a way, because they couldn't move forward with it. XRP being a part of America's crypto reserve, at the same time SEC suing XRP for securities purposes, made zero sense, which Ripple used essentially politics to get things done quicker in their favor, which as it should be, because if you want to survive in this world and you want to be operating as a major large-scale company, it could be in any category, automotive industry, technology industry, payments industry, you have to play the politics card. And Ripple played their politics card pretty damn well. So one thing that was stopping Ripple was the injunction that Judge Torres put, which was that, essentially XRP being sold to institutions was considered security. XRP on the traditional market space was not a security, and also not being sold to institutions. Now, the SEC and Ripple have come to a conclusion, which is this. Ripple Labs and the US Securities and Exchange Commission have reached a deal that could essentially officially end one of crypto's most high-profile legal battles as a part of its arrangements. The SEC essentially will return $75 million of the $125 million fine Ripple paid last year, keeping just $50 million to settle the case. The SEC gets to keep $50 million from the $125 million. Ripple gets the walk away. But not only that, Ripple gets their injunction lifted, which is what they cared about most. Ripple's chief legal officer, Stewart, shared the news on X, calling the move a long-awaited resolution. The deal still needs essentially a final sign-off, without a doubt, from the SEC's commissioners and court approval. The settlement comes shortly after the SEC dropped its plans appeal of 2023 ruling by U.S. District essentially Judge Torres. In that decision, Judge Torres found that Ripple's XRP sales to retail investors through exchanges didn't break securities laws, a partial win for essentially Ripple. However, she ruled that some institutional sales did cross the line, resulting in a $125 million penalty. The SEC had originally sought nearly $2 billion in civil penalties and disarrangements and interest, but the courts landed on essentially a much lower figure. And now Ripple could walk away with a refund covering 60% of that fine, and essentially for its part agreed to withdraw its own planned appeal in response. And Stewart also said the SEC will ask the court to lift the standard injunction that restricted Ripple's operation. Ripple not being able to essentially sell their XRP institutions and be considered security, that's going to be completely lifted, essentially, which makes sense. Ripple pays $50 billion as, to the SEC, and the SEC lifts the ban. XRP briefly rose about 1.5% after the announcement, hitting $2.47 before pulling back. It remains down significantly over the past 24 hours, mirroring a broader market trend that's happening right now. And the legal battle originally stemmed essentially back in December 2020. Now, putting all the Gary Gensler scenarios and so on in the past, this is incredible news. And I've just saw the comment that essentially Harry made inside the comment section as well, which Harry said, ChatGPT says it will take years to free XRP from Judge Torres' judgment on XRP being a security for institutions. Incorrect. ChatGPT a while ago said that the XRP case, in terms of their appeal, it will take essentially more than a year. A while ago, if you asked ChatGPT in January or in February or even in March, essentially, if you ask ChatGPT in February times, let's say, when will essentially the appeal be lifted, or in January times, it would say within 7 months or essentially a year, most likely, or so on and so on. Just because ChatGPT says it's going to take years for that to happen, it doesn't make it true. Actually, to make it even more sense, at the bottom of ChatGPT, so if you click on ChatGPT, just for everybody's future reference as well, if you click on ChatGPT, below the search box of ChatGPT, it actually states word for word, because I have ChatGPT open on my screen as well. It says word for word, at the bottom of the search box for ChatGPT, it says ChatGPT can make mistakes. Just saying this because everybody takes what ChatGPT or Gemini or any other AI tool out there as gospel. And you shouldn't. Because even the people who design these AI platforms do put in very clear words, ChatGPT, if you open ChatGPT under the search box, it clearly says ChatGPT can make mistakes. And I know everybody runs to ChatGPT and types in, when can the Ripple case be over? And Ripple case, and ChatGPT comes out and goes, oh, in 2 years' time. Everybody goes, oh, it's going to take 2 years. No, it isn't. Just because AI says something doesn't make it true in any sort of a way. And they state this themselves by saying right at the bottom, ChatGPT can make mistakes. This is what they say under the search bar. So just want to put that out there for people. Don't take whatever AI says as gospel. Now back to this. This is incredible news. But the most incredible part about it is the timeline. The timeline of the SEC today announcing their roundtables. More roundtables coming for crypto regulations. The DeFi space connecting to the traditional market space, wallets. And then today we also had FDIC coming out and saying they're going to eradicate the risk rule for the banking system so that banks can start utilizing crypto assets And they're going to find a way for banks to utilize crypto assets as well. And then today, again, also the announcement of the SEC and Ripple essentially scenario where, they're going to be paid off $50 million essentially, and Ripple gets a $75 million discount. The injunction gets lifted. Everybody walks away into the sunset. Brilliant. Absolutely incredible news. All we have to wait for now is the T's and dots, which were the exact words essentially Stuart used. The T's and dots for the finals. And everybody gets to walk away into the sunset, which originally goes back to what I said when people asked me, when do I think the case is going to be over? And I said the first quarter or second quarter. But the best part about this is XRP always needed 3 green lights. First green light essentially being the case to be over with. The second green light was regulations, what XRP needed due to their client base. What Ripple's trying to achieve is be inside the financial sector in terms of banks and institutions, which regulations is all it needs. So there's no more gray areas. And the third one being essentially utility and adoption. So we're about to get our first green light with this case being over. Ironically, the second green light, which is regulations, is working out in the background, genuinely working out in the background with the FDIC, finding the way. They said in the room was, we're finding a way for the banks to start utilizing digital assets, which was announced today. The same time the Ripple announcement was made today as well. Nothing really happens by coincidence inside the financial sector. It's more on the parts of coordination. And on that note of the incredible announcements from today, honestly, we have reached the endings of tonight's live. So if you're watching this for the first time ever, this is called the CMF Live. And this is episode 285 of the CMF Live. And in this live, I always talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. And I recommend everybody to tune in Monday to Friday, 11:25 p.m. UK time, because especially if you're inside the crypto space, or even if you're a beginner inside the crypto space, it's always nice to be updated. And I always break down things in the most simplest way possible so everybody can have a better understanding. And also this live show airs 11:25 p.m. UK time, Monday to Friday. So definitely tune in tomorrow for episode 286 of the CMF Live. We're on episode 286 tomorrow. Tune in. If you already haven't, like, comment, share, retweet this live. If you watch this on X, essentially, if you watch this on YouTube, like, essentially, and comment. And subscribe if you watch this for the first time on YouTube. Follow me if you watch this for the first time on X, and tune in tomorrow. Turn on the bell notification app as well. And also, we have everything I provide is completely free of source. I don't charge a single penny. We're on episode 285 right now. I've been doing this for more than 2 years and a half now, and I haven't charged a single penny, and I'm never going to charge a single penny. So, and we do offer other free services as well. So I offer essentially this live that you're watching, a Telegram group for this live as well. It's called the CMF Lounge, the Crypto Family Miles Lounge, and a X communities page, which is on my profile on X. Join our X communities page, which is called Crypto Miles Family Lounge, which is the name of this live. CMF Crypto Miles Family. Before we do go, let's inside the comment section first. Before we do go, just see what's happening there. Miles, what about LAT? That was another one of your calls, which I'm down as well. Should I sell that too? If you want to. I lost my LAT because I switched phones. I'll be very honest. Okay, thanks. I wanted to make sure that I had all of them. I'm familiar with XRP, XMSH, but wanted to make sure I grabbed a bag of every type. Thanks. No problem, Stormy. What about the injunction, and can regulations free XRP to sell? Is it essentially security non-security? Yes, they can. The injunction will completely lift it. ChatGPT. Thanks, Miles. I like your answer better. Let's go, Harry. Night, Miles and CMF. Pablo, see you tomorrow, same time as usual. Thanks, Miles. Michael, let's go see you tomorrow, sometimes as usual as well. Good night, Miles and CMF. Mike, let's go see you tomorrow, sometimes as usual as well. Great job tonight, Miles, even though I was about 45 minutes late. Let's go, Scott. See you tomorrow, sometimes as usual, brother. Miles, the humble goat. Let's go, Scott. See you tomorrow, sometimes as usual, brother. Good night, Miles. All the CMF. Thank you for a great live. Let's go, JP. See you tomorrow, sometimes as usual. Congratulations on episode 285. I'm an OG of the CMF. Let's go, Scott. Facts. Miles is free, has always been free, and has never charged me for anything. Facts. Great live. As always, like, share, and comment for support. CMF. Take care all. Let's go, Ray. Absolutely facts. If you already have the CMF members, take a second to like and share and comment section or retweet, and even put a comment down outside the live as well on X. If you watch us on X, Night Mouse, exceptional live as always. See you same time tomorrow. Let's go artistic. See you tomorrow same time as usual. Let's go Mouse. Outstanding effort tonight, Mouse. Let's go Scott. Good night, Mouse. Can it see you tomorrow same time as usual as well? Thank you, Mouse. Pierce, see you tomorrow same time as usual as well. Scott, see you tomorrow same time as usual as well. Miles for president, for US president. Let's go, Scott. Good night, CMF. Thanks, Miles. Let's go, Scott. Love my CMF. Blessed. Let's go, Scott. I will see everybody tomorrow, same timing as usual, for episode 285 of the CMF Live. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual. Good night, bro. Funky brother. See you tomorrow, same time as usual as well, Funky brother. XRP, Parting Dubai coming soon. Let's go, Scott. See everybody tomorrow, same time as usual. Good night, Miles and CMF. Great live. See you tomorrow. Free forever. See you tomorrow, brother. Same time as usual. See everybody tomorrow, same time as usual. Like, comment, share, subscribe, follow. If you already haven't CMF members, like and comment and retweet. Let's go. See everybody tomorrow, same time as usual.